Welcome to Affordable Trading with the Micro Eminis. I'm Don Singletary, and today I have a very special selected trade I want to show you, and it's a very short trade. After that trade today, I have some great trading tips I've assembled, and I want to go over some of them with you with the hope that it might help you along. Featured trade today is the Micro Emini, the NASDAQ100 Micro. It trades at a convenient $2 a point. In the top half of the screen, the red rectangle, is the 5-minute candlesticks, and the bottom, the MACD, our trade signal indicator with default settings. Now here on the channel, I do what's called the trade setup. You're looking at a still screen now, not a video yet, but I want to talk to you about why this trade and why now. Now, one of the reasons I chose this trade to use as an illustration in today's video is because of the setup. This one is unusually straightforward and easy. I would even call it a textbook or a classic setup. The market's flat for 2.5 hours between 6:30 and 9. And you see the red arrow on the right, that's 9 o'clock, and it goes right through the opening at 9:30, and the trend is still very much down. Now direct your attention to the bottom of the screen, the trade signal indicator, the MACD. See the red arrow that goes down below the zero line and the green line below the red line. Now I'm going to show you something you find very useful, but in video trading, it's not really talked about very much. That scale on the right of the MACD, anything above the zero line is going to be positive momentum going up, of course, and below the zero line, the opposite going down. But wait, there's more. See the blue circle in the right margin of the MACD? See those numbers? I don't know if you can read them. The red rectangle there is about 16 or 17, minus 16 or 17, and the other one is minus 25. Now, the distance between that red and green there is the same as the distance between the two lines over on the left there at the tip of that red arrow. Well, you can look at the red and green arrows and see clearly in the last hour they've grown further apart, and those negative numbers over in the right margin have gotten more and more negative. And that means, for sure, the market is definitely has a tendency going down. If the lines weren't so far below the zero line, and if the right scale had numbers of minus 5 and minus 7, it wouldn't be nearly as bearish as the minus 17 and the minus 25. Now, one can argue, and you'd be right, that the numbers, the red and green rectangles there, are just kind of a redundancy of what you see when you look at the distance and where the red and green lines are. Now, the reason I just explained those numbers on the MACD to you is because the more familiar you are with what they are, the more confident you can be in the way you read them. A lot of beginners without any trading experience at all yet, they're just getting into this thing, will write me or think when they see this red and green, I see, when it's green I buy and red I sell. I could quit my job. Well, just doesn't work that way. Let me tell you, all the types of charting and every one of the 150 plus trade signal indicators are mere tools. There's no free lunch. You learn to use these tools like a surgeon or a carpenter or a plumber or a mechanic, or like any business where somebody has to develop a skill. And that's what we're doing. Everything on the channel is free. You get a free trade simulation program, over 172 videos to help you learn. We are dedicated to helping you learn to day trade the Micro Eminis. There's no other channel like it. Subscribe now and hit that notification bell, and you'll be immediately notified every time we put up a new training video. It's all free. Join our over 22,000 subscribers. We'll have a little fun, make a little money, and put some sand in your shoe. Check out the book on Amazon. It really speeds up the learning process when you know what's important and what isn't. It's a short book. It gets right to the point. It uses the same language we do here on the channel for some really easy understanding about the basics. And there's a special chapter in there on trade psychology to keep you from those rookie mistakes. The book helps support the channel here, and for that, thank you, everyone. So let's make some money. Time to put the next trade in the books today. I'm going to be performing this trade at 10:01, shorting one contract of the MNQ, the NASDAQ100 Micro Emini. To sell the contract, I just simply click on the bid price. Then to put in a bracket order, one cancels the other. I select that, and I can put in my enter, stop, and target price all at one time with one order. You can see I shorted the contract at 15,954. My stop is 6 points up at 15,960. That's 6 points up, means I'm risking $2 a point. That's $12. Not a lot to risk in a trade. Now, the first thing I do is grab my mouse and my Tasty Trade mouse and pull that target down, get it out of the way. Then I go up and I look. I'm already trading down to about 15,935. So I want to go up and click and drag and bring that stop down and lock in some of this profit that came so quickly. Now, I'm going to pause the screen here because we're only 35 seconds or so into the trade, and I want to make sure, especially if you're a beginner, you can follow what we're doing. Some of you who've been doing this trading for a while recognize how confusing it can be for a beginner, so that's why I stopped the screen. Let me go back 35 seconds. I shorted the contract at 15,954. I was up $8 after only a few seconds in the trade. Then I moved my target price down to get it out of the way. The first few seconds into the trade, as I noted, I knew it was going to make a profit, but I don't know how much. Well, you put in a target price, but you kind of make it up out of thin air. Did I just say that I made up the target price out of thin air? Yes, I did. And that's the case always, not just this time. You can't tell the market how much money to give you. That's a ridiculous thought. I wish it were true. So when you're putting in that bracket order to open the trade, don't spend too much time wondering about what the target might be. Okay, so I shorted the contract, then I moved the target price down to get it out of the way, and then I tend to business. In the orange circles at the top of the screen and in the right margin, you see the current trading price is 15,923. So that's why I took my Tasty Trade mouse and brought that stop down. And you may have noticed I moved that stop down very quickly. Let me tell you why. Or better yet, I'll just show you. Let's do some quick math here. This is why I put the screen on pause. When we sell a contract, that's called a short sale. Everybody knows you buy low, sell high, but you can also make money if the market goes down by selling high and buying lower, and you keep the difference. And we call that shorting a contract, going short. One more thing for me to explain, and then we'll go back to the live screen. I guess it's sort of human to try and prepare yourself for what to do when things go bad, but this right here clearly is a case of what to do when things go good, very good, up $62.35. So what do? I reach up and I take that Tasty Trade mouse, I bring my stop down to 15,931 and a quarter. Now when this happens, as a beginner, it flashes through your head what you've heard someone say before. Cut your losses quickly, let the profits run. And that's exactly the wrong thing to do. In this kind of trading, those profits can disappear just as fast as they appeared. What happened in this trade is not unusual at all. In fact, it happens a lot. So watch this video a couple of times. Do whatever you need to do to rehearse, to train your brain what to do when you have sudden profits. If you're not prepared, it could cost you money. Now, I've done these trades hundreds, if not thousands of times, and so it's second nature to me now. I didn't calculate 15,931.25. I just took the mouse button and brought that stop down so I knew I could save about 20 points on there. In fact, if you rewind this video and watch what happened, I was dragging the mouse cursor down all the time while prices were falling. I was chasing falling prices, and at some point I had to let go of the left mouse button and see where I was. In that instant, I had three choices. I could do nothing and risk all the $62, or I could move the stop down, which I chose to do, or I could have gotten out instantly and taken the full $62. Here's another very important point. You never know which of those three is going to be the most profitable choice until after the trade's over and you have the full genius of hindsight. To put it a little more bluntly, this kind of trading forces you to make decisions before you have all the facts. And that's a fact. I'm going to quickly go back to the live trade now. We're 38 seconds in. Now, I know what's about to happen, of course. There's 17 seconds left in this trade. and watch what happens. Naturally, I get my tasty trade mouse ready so I can move that line down some more, capture some more profits. But it's not bound to happen. Here's what does happen right now. I get stopped out, 15,931 and a quarter. Now, if you're a beginner, you're probably going to slap your forehead and say, damn, I could have had $62, but I didn't take it. But I told you, that's only obvious with the genius of hindsight. I promised you I would bring you a few more trading tips after the trade, so let me make that good for you. One of the things you may not realize as a beginner or even experienced traders overlook this. We made 45.50 in about 1 minute. And the odds of that 45.50 doubling in the next minute are less than 1 in 25. Now, the takeaway from that comment is this: if you want to make more money per trade, trade a higher number of contracts. We traded one here. Had we traded 2 contracts, we would have made $91. I get asked, how come almost all of your trades are just one contract? I want to make more money than that. And I do. I have some trades where we make $15, $25, $30, $45 with some regularity here on the channel. But the truth is, the way, if you want to go with the odds, the way to make a higher average per trade is trading multiple contracts, not hoping your $45 is going to double in the next 60 seconds, because that is a long shot. Why do I continue to show only one contract in almost all the trades here on the channel? The reason is quite simple, because if you learn to trade with one contract well, you can advance to 2 contracts when you have the confidence. But when you're first learning, if trading multiple contracts can get very expensive when you have no experience and no idea what's realistic in this kind of trading. So I'm just trying to share that with you so you can look forward to the day that you go from one to more contracts. And it's a lot of fun either way. 2 things that inexperienced or beginning traders do more often than everything else put together. These are the 2 biggest mistakes. One is to keep changing your setup. Change your signal indicator, change from candlesticks to bar charts, change. And that stems from the fact that you may have been taught that you're making a mistake every time you don't make money, but that simply isn't true. Even if you're good, you're going to lose 40% of your trades, and you'll win about 60% if you're pretty good at this. And it takes practice. Now, I want to make a point for you. Imagine this. Imagine you're learning for the very first time to play tennis, and you check into a tennis camp for a week. And every single time you go out to the courts on a new day, they move the lines around. Well, in a week, you're not going to learn how to play tennis if they keep changing the lines. Well, when you swap out trading indicators and methods of your trading, you don't get to practice what works because you're constantly changing. Your brain cannot learn unless it has consistency. It's that simple. I almost got out a drum roll and put it under this one because I'm going to tell you the number 1 most common mistake, and it's the last thing you want to hear. It's overtrading. You know what bad poker players say when they lose money at a Thursday night game? They say, heck, I had a heck of a good time, had a few drinks, and if I'd gone out to a movie or dinner, it would have cost me more than the $50 I lost. Good poker players are thinking, if not saying it, that, gee, I had fun too. I hope old Joe comes back next week. We can have some more fun. The lesson here, of course, is don't be Joe. I only have one goal in trade selection. All I want is just a good chance. Just a good chance. Better than 50-50 to make some money. And then I'm in. Some days that may happen 3 times an hour, and some days 0, nothing at all. But if you're trading constantly, overtrading is very, very expensive. Be selective and start making money. If you're trading and not making more money than you lose, you're probably doing the same thing over and over again, and it just isn't working. Now, if you're trying new ideas all the time and losing money, that means what you're doing isn't working. Clearly, the reason is that you just can't clone a system and make unlimited wealth. Why is that? Because every trade is different, and every trader is different. Let me offer you something you can try to learn and execute, something you can take and put your own twist on it and practice. I did it in the trade you just saw today. All I did was find a trade that gave me a better than 50-50 chance of making money. Now, how did I do that? Here's my trade selection process. First of all, I've learned to be patient and not overtrade. I identified a trend in progress. This allowed me to risk only $12 maximum on the trade. And I know this because I've done it over and over again. It isn't always $12, of course. The minute I hit the send button and entered the trade, I knew the worst thing that could happen to me is I would lose $12. That's it. I selected a trade that had odds in my favor, and I knew I would not move my stop to take a higher risk if the trade didn't go my way. That is called trading with resolution and accepting the fact that you're going to lose at least 40% of your trades. Hope is not a strategy, and wearing those rose-colored glasses is very expensive. I can easily tell you the very best moment in time of this trade. That was when I moved my stop loss order down and reduced all the risk on the trade. Notice I said all the risk on the trade, not some of it. So when you use your stop loss to eliminate all risk on the trade, you are riding the bus absolutely free, my friend. This kind of trading, that's the point you want to get to, because that's when it becomes a lot of fun. You've already won the trade. The only thing left to realize is how much money you're going to make. And I like that. Only say one thing to help you improve your trading, it would be this. Forget about how much money you may or may not make on a trade. Learn to zero in on reducing the risk on a trade, and you'll get a lot luckier than you might have been. You may want to bookmark this video. Watch it a few times. It's food for thought. You're the captain of the ship, so the decision is, of course, entirely up to you. I need your help on something. Hit the like button. I count those. I tally them to help me determine what content to put on the channel. I need your help with that. Thank you very much. One of the things that helps you learn faster and easier is knowing what's important and what isn't. That's what the book does for you. Check it out. It's on Amazon. Read some of the reviews on there and make up your own mind. I'd appreciate that. It supports the channel. I'm Don Singletary, and I hope every day is a payday for you. Thank you.